Hey, this is Brad Gill, NextHome Lifestyles, back with another market update for the city of San Jose. It is the week of September 5th. All right, again, we're still seeing a slowdown in listings and kind of a leveling off in buyer demand. Interest rates are fluctuating between 5 and 6%, and things are kind of returning back to normal. So let's dive into it. So this week we have active inventory down again. I believe it's been falling ever since the beginning of August. So for the fifth week or so, down 10%, so pretty significantly. And I'll get into why a little bit later. But again, that's down from 922 units were on the market the week before, which itself is down 5%. So again, this is kind of seeing that the seasonal slowdown in inventory. We definitely already hit the peak of inventory back in the month of July, and now we're starting to come down. It's due to more active buyers in the market since August, so definitely pick up in buying activity, as well as a slowdown in new sellers coming to market and some sellers that were on the market, but the properties didn't quite sell due to the decrease in pricing we saw, so those are finally starting to drop off as well. Demand. So demand is pretty even. It's down slightly, 673 units currently under contract, down 2% compared to last week, which was up 3% from the week before. So that's pretty healthy market. Overall, that's less than a 2-month supply of housing. So again, I mean, if you're a buyer looking at this situation wondering, hey, we're not back to that same level of buyers or buying activity that we saw over the last year and a half, that's a good thing. It's not because properties aren't holding their value. It's slowing down, interest rates a little bit higher, but again, you have options, lower down payment, etc. Don't wait around for the first of the year when that inventory, when your selection continues to fall and everyone else comes back into the market. Right now is a great opportunity. Okay, moving on into inventory and demand trends. So new listings down 17%. So that's adding to that 10% down in total active inventory. Demand trend down also, not as much as new listings, but down 11%. So again, we'll keep tracking that demand trend or the number of new contracts being ratified, but that is slightly dropping along with new listings coming to the market. But overall, still keeping a pretty healthy market overall. Market expectations. So this is what's added to the total active inventory decreasing, and we're gonna see more of it as we head towards the end of the year. It's just when a seller has the home on the market and it's not selling, obviously they're not gonna stay there for too long. They're gonna figure out how am I gonna rent the property out, move back into it, or something else. But again, sellers in this market, they don't have to sell. So I'm not surprised to see 103 units. We doubled, up 95% from the week before as far as properties coming off market. Either they expired, they were withdrawn, or the listings were canceled altogether. Price changes, we also follow price changes. So price changes down barely, but we're gonna call it 35% of the market, which was pretty much equal to last week as well. Remember, when that pricing gets, or those price changes get to be about 30%, again, that's a healthy market, so we're not too far off. That number's not drastically increasing again, which means the majority of sellers coming to the market, listing their homes now, are pricing it pretty accurately. All right, 30-year fixed rate mortgage, the rate is up 5.66 slightly from last week. That's definitely slowing down a little bit of demand. Obviously, as mortgage rates increase, then home affordability goes down. But overall, again, with minimum down payment programs and not a lot of bidding wars breaking out, it's a pretty opportunistic time to be a buyer in the current marketplace. So if you have any questions about current market conditions, you want to come up with a strategy, feel free to reach out. Otherwise, I invite you guys to come back next week for another market update. I'm Brad Gill of NextHome Lifestyles, and hope to see you then.